What is going on, everybody? Welcome back to the channel. And in today's video, I want to talk about something that you might hear a lot of people talk about, whether you're on crypto Twitter or crypto YouTube or just talking to your friends about trading, and that is CME gaps. Now, you might hear people talk about, oh, we have a CME gap down here, we'll probably go fill that, or oh, we have to fill this CME gap, and you'll hear all this talk about filling gaps. Now, this is different than a fair value gap, which we've made some content on before, and it's also different than a volume gap or a low volume gap, which is another thing that we talk about a lot on the channel. Now, CME gaps are different in many ways, and in this video, we're gonna talk about what even is CME, what does it stand for, what are CME gaps, what do they mean, and then we're gonna jump into the charts. I'm gonna show you guys how you can find these gaps manually, and then I'm gonna show you a free indicator that you can use that actually highlights these CME gaps very easily, and I'll even show you how you can use CME gaps in your trading plan to add a little bit of extra confluence to your trade setups. But before we get into it, guys, make sure you hit that subscribe button, smash the like, and click that notification bell so you don't miss any of these awesome tutorials or urgent market updates that we upload to the channel. Now, CME stands for Chicago Mercantile Exchange, and basically what they are is a huge derivatives exchange offering futures and options on a bunch of different assets, and yes, that includes Bitcoin. And while we're at it, we might as well explain what a future is. And basically what a future is a derivative, meaning not the actual asset. What futures allow people to do is it allows people to trade the volatility of Bitcoin or another financial asset and make money off of it without actually holding the asset itself. So yes, if you're out there trading Bitcoin futures, you're not really actually trading or holding Bitcoin at all. You're actually just buying and holding contracts. So now that you know what CME actually is, and now you have a basic understanding of what futures are and how futures are actually different than the actual financial asset, aka if you're trading futures, you're not actually buying or holding the asset at all, you're simply just trading derivatives contracts. Now that brings us to the CME gap. Now, like I said at the beginning of the video, you might hear people talk about, hey, we have a CME gap down here, we'll probably go fill that, or oh, we have a CME gap here, we have to fill that before we continue down or continue up or what have you. You'll hear people talk about, we have a CME gap down here, and they seem to be interested in it for some reason or another, and you just might be sitting there scratching your head like, what is a CME gap? So now with all of that out of the way, this brings us to what is a CME gap? Before you understand what a CME gap is, you have to realize that, as you guys may know, Bitcoin actually trades 24/7, as all of crypto does, which is part of the reason why a lot of us love it. But Bitcoin CME futures don't actually trade 24/7. They actually only trade during the typical traditional trading week. Now, this is very similar to the stock market where you only trade Monday through Friday. Now, Bitcoin CME futures only trade between 6 p.m. Sunday and 6:45 p.m. on Friday. Basically, all this means is Bitcoin CME futures close at a certain point, giving you that gap in price action. So the price action actually completely stops, very similar to how the stock market closes on the weekend. This is a very similar situation with the CME futures. And this will actually make a lot more sense once we actually look at the chart. This brings us to the CME gaps. Now, this is what creates the gaps. So while the Bitcoin CME futures are trading and then the price action completely stops, while you have the actual crypto markets continuing to trade throughout the entire weekend. Now, what this can do is create a gap of where the CME futures closed and where the actual spot Bitcoin price is at the start of the next trading week. So, for example, let's say Bitcoin futures, for easy math, are trading at about $20,000, and then the futures markets close. And while the futures markets are closed, you have the actual spot price of Bitcoin gets a pump over the weekend, and let's just say it runs up to 21K. Now, that CME gap would be the difference between the close of the future markets at $20,000, and then when the futures markets open and the spot price of Bitcoin is at 21K, you now have that gap between 20,000 and 21,000. Now, the reason traders pay attention to this is because, very similar to fair value gaps, gaps, price likes to come back down and revisit these gaps, and that's where you get the term filling the gap. So when you hear somebody talk about, we have a CME gap down at 20K, we have to go visit that before we get another move up, that's what they're talking about. They're talking about the difference in price action, or the difference in price between the futures market closing and then reopening at the beginning of the trading week. If that spot price of Bitcoin is higher or lower, depending on what you're looking at, the CME gap is just the difference between those two prices. We see something very, very similar happen in the stock market. Without further ado, let's go ahead and jump into the charts. I'm going to show you guys how you can actually see these gaps, and then I'm going to show you how you can use a free indicator to spot these gaps so you don't always have to look at the Bitcoin CME futures chart. And then I'm going to show you guys how you can incorporate this into your trading plan, again, to add a lot of confidence to your trades and enter those trades with ultimate confidence that your trade idea will play out. Let's get into it. So you can see, if we zoom a little bit down to the 1 hour chart to take a look at this gap, you can see that the gap begins on this green candle on Friday, and then you have this big gap, and your next candle is on Sunday, and this gap in between is where the CME futures market is closed. And again, whatever the spot price of Bitcoin is doing in this gap is what creates it. If we go back in time just a little bit, you can see we have another gap here. And again, you can see the market closes on Friday and then opens up again on Sunday. You could just see that by looking at the candles. And then you have the gap in between. You can look at this as on Friday, the CME futures closed at this current price. I'm not going to really try too hard to get the exact price here, but it's at about $35,960. And then while the CME futures market was closed, you can see that the spot price of Bitcoin must have actually moved down, but because the CME futures market was closed, you don't have any price action in that gap. And then when the market opens back up on Sunday, you can see it gaps down all the way to about 34,420. The reason that people like to pay attention to these gaps, if we create a gap here, it is likely that price will at some point come back up and revisit that gap. Now, the tricky thing to figure out here is when it will actually get filled, because just like a fair value gap, if you create a CME gap, there's really no guarantee on the time frame. And sometimes it could take days, weeks, or months to come back up and fill a CME gap, but you can still use this in your trading plan to add confluence to your setups. So if we actually pull the CME futures, which you'll see on the right side of my screen, and you'll see the regular Bitcoin spot chart on the left, you can see that when the futures market closed on Friday, you can see that on the spot chart, we actually just continued down here. But obviously, because the market was closed on the CME futures exchange, you can see that that's what creates that gap. So now that you know what the CME gaps look like on the chart, and I do want to put emphasis on this, guys, you will only actually see these gaps if you're looking at the Bitcoin CME futures chart. You will not see this on the regular Bitcoin chart that you're looking at. Maybe you're most likely looking at the exchange that you're trading on. So if you're looking at a Bybit chart, a Coinbase chart, a KuCoin chart, or a Femex chart, or a BitGet chart, you're not going to see these gaps pop up on those charts, because those are just regular spot charts and not futures charts. So you're not going to see these gaps pop up on those charts. So you're going to have to come to the CME chart to see them. But at the end of this video, I'm going to give you guys an indicator that you can use to actually see these gaps on any chart you're looking at. Let's get into the meat and potatoes of this video, which is how you can actually use this gap to add confidence and confluence to your trade setups. Interestingly enough, guys, this gap that we were just looking at between about $28,000 to about $29,000, and this is very interesting because at the time of recording this video right now, on January 17th, 2023, this CME gap is actually in a lot of people's crosshairs because we are getting a massive rally out of the bear market, and a lot of people think that we could be on our way to come close this CME gap. And like I said, you know that they don't always get filled right away. In this case, if we were to fill this gap today, it would be 218 days later. Now, Granted, about 70% of CME gaps are filled within a week. There is no guarantee saying that, these gaps will be filled in a certain amount of time, and you may not want to put 100% of your bets on looking at this one indication because you don't know when the gap will actually get filled. So you do just want to use this as another level of confluence alongside other forms of TA, and I'm going to show you how to do that right now. So guys, here we are on the 2-hour time frame, and I want to show you how you can actually use these gaps in your actual trading plan to add confluence and confidence to your setups. So you could see here, it is Friday on this bar right here. The futures market closed, and then you can see we opened with a gap down here on Bitcoin on Sunday. Now, this did create this gap. I will go ahead and highlight this gap just roughly right here with a circle. So you have a gap in this area between about $16,225 and about $16,520. So the idea here is, even if we do continue to move down with price, if we can find some long positions, it might be a decent idea to take this gap into consideration when trying to figure out how much we can pump to the upside. So just for example, let's go ahead and play price forward here. You could see we continue to the downside just a bit, and you could see on our indicators down here, we are starting to get some green dots indicating that we might be getting ready to have a bounce, and you can see we are generally coming down to a level of support here. You can see we got a bounce here, and a bounce here. And now we have come down and tapped this level right here. And whether you're looking at the BitLab trading stack giving you an RSI bullish divergence at this level, or you're looking at another indicator giving you bullish signals, you could expect to potentially be looking for long positions at this key level. Now, I am a big fan of divergences, so as we approach this key level, you can see we do have lower lows here. I'm just going to be looking at the BitLab market intelligence indicator, and it is calling for an RSI bull div at this key level, so that would be technically a long position opportunity according to my strategy. Now, this isn't a strategy video. I am just doing this for the sake of this tutorial, so I would like to have more confirmation than just that bullish divergence. However, let's just go ahead and say that we got a bunch of confluence here and we were looking to go long. Let's say we caught it somewhere on this wick down here. We set our stop loss to whatever our risk tolerance can endure, and let's just go ahead and target this CME gap for a potential 6% gain with a risk to reward ratio of 4. So let's go ahead and see if this gap gets filled. And boom, there you go. We actually did wind up coming up and hitting that take profit. You can even argue that we came up to close that CME gap right here. However, I wouldn't consider this closed until right here because we almost got up right to that candle where the futures market closed on that Friday. So the basic idea here, guys, is that we knew we had the gap here. So when price came down and we looked for a long position, we figured it may be likely to come back up and fill this gap here. And obviously we did just that. So this is basically how you'll see a lot of these CME gaps play out. For example, if we come back to our current price action right now, you can see right here on our current price action, we actually have another fair value gap right here, as you can see by the massive gap in candles. And the idea here would be that at some point it would be likely for us to come down and fill that gap. And guys, that is basically how you can use CME gaps in your trading plan to either add extra confluence or just trying to find price targets where price may actually wind up visiting. So if you see a massive bearish divergence against key levels of resistance, and maybe your next level of key support is right near a CME gap, you can just add on to the list of confluence there that it would make sense to get to that level if that CME gap gets filled. Let's just recap real quick. We now know what the CME is. We know what CME gaps are. We know how they're created, why they're created, and how we can use them as an additional piece of confluence when looking at our trade setups. Now, let me go ahead and show you guys a free indicator that you can use so you don't have to be looking at the CME futures chart, and you can just go ahead and look at your normal chart. For me, I do look at the Bitstamp chart very, very often. So you could see here on the Bitstamp chart, obviously we do not have the CME gap here, but we do have it on the CME chart. So if we come back to Bitstamp and you come up to your indicators tab, click there once and type in CME gap, There are a few different CME gap identifiers that you can use that are free on TradingView. For me, I've just been using this one, CME Gap BTC by ANCH1991. I have no affiliation with this person. I just simply found the indicator and enjoy using it. So if you go ahead and click there, I actually click on this plot right here and I'll open up the settings and I actually turn that off. There you go. Now it'll readjust your chart and you can see here that we actually have that CME gap identified by this red shading. Now, if we go back to the CME chart, you can see that we have that red gap on the CME chart as well, and it matches up with our gap right here. So all this really does is bring those CME gaps onto your normal chart that you're used to looking at already, and there you go. Now you'll never miss where the CME gaps may be, and again, right now it would be likely for us to come back down and fill this CME gap down here. But remember, guys, it doesn't mean that we're immediately going to fill that gap. A lot of times, as you saw in the example previously, it could sometimes take weeks or even months to go fill that gap. But looking at CME gaps, again, it can just give you that extra tool in your trader's tool belt to give you that extra piece of confidence, to give you the confidence to hold through your trade and trust your setups. So, guys, I think that's all I got for this video. I just wanted to cover this topic because I hear a lot of people talking about CME gaps lately, because we do have that CME gap between about 28 and 29K that I know a lot of people are looking at and think that we might be able to go up and fill. So maybe we go up and fill that 30K gap before coming all the way back down and filling this one at about 20K. But it's very hard to tell. But now you guys have that extra tool to keep in your tool belt to add extra confluence to your trades so you can make some of those sweet, sweet bagels. So go hit the charts, pull up this free indicator, pull up a Bitcoin CME chart, and look at these gaps and see how long it's taken gaps to get filled in the past. Remember, always do your own research, but about 75% of gaps do get filled within a week, so it is a decently reliable indication. Obviously, you want multiple confirmations when you're trading, and if you're in the Candle Mafia, you already know that. So, with all that being said, that's all I got for this video. I'll see you in the next one. Frankie Candles out.
Here we go, at the top of the class on a roll, and it's time to run it up, yeah, you know. Maxed out, put the pedal to the floor, ayy, on the road, here we go, here we go. Yeah, we winning by a landslide. Never see me coming on my landmine. Yeah, I ain't taking orders in command, like, yeah, you about to see me on demand, like.